This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Anyway, we talked about 1800, 1820, maybe even the 200 day would be their goal. Well, now that it's happened, well, there they are. You can clearly see the support we should have between 1800 and 1820. The rising 200 day is 1808. Now, you know the criminals would give anything to break that 200 day and see what kind of damage they can do. Look, anything's possible at this point. I mean, we'd be talking 17 something. I'm not ready to go there just yet, okay? I expect us to rally tomorrow back up to that 1850 or so, somewhere near there. And then we'll just deal with Wednesday. The market's closed on Thursday, Friday. Once we get into December, we can start focusing on the December FOMC, all of this other stuff, the inauguration of Biden and the seating of people like Mother. Yeah, sentiment's going to turn. Don't worry. It will. All right, and silver, remember I've been telling you I was going to buy some if it got to 23.50. It did get to 20. It got to 23.46 today. So I went and bought. I couldn't find a silver call, a silver futures call that was affordable. It was outrageous. I mean, I was looking at like $31 and $35 strike prices, and I'm like, what? I mean, that's 40% from here. So I thought, well, okay, I'm not going to go that route. But I did buy some calls. They don't expire until February on that Silge, that junior silver miner. Yeah. Why? Because, again, it's just playing out. I mean, again, keep in mind that silver is still working on making a higher low, even after the smash today. Okay? You can see that on this chart. And again, you can see the importance of the 50-day. You know how the banks fight against any breakout above the 50-day. Look at I took you back 9 months to remind you. Remember, we came out of March and QE to infinity, and gold's going like crazy, and silver's doing jack. Remember that? You can see it here in April. We spent almost 4 weeks unable to get through the 50-day. And it was obvious what was going on. Gold kept going higher, the shares are going higher, and silver's going down. It goes from 16 down to 15. And we were all just, almost suicidal. And then once it got above the 50-day, it went from 15 to 30. 3 months. So does it surprise you then that we've now spent 7 days getting slammed back below the 50-day? Yeah, just like we did in April. But eventually the fundamentals took over, and look what happened. It'll happen again. It may take, again, this was 4 weeks in April. If it ends up 4 weeks, we come down here, bottom out 23.50 like we've been talking about, then we trade sideways into December, then finally break out. We're basically just tracing out the same pattern that we had back in April. So again, please don't despair. What else would make us think that this is all overdone manipulation and we're due to catch up? Remember how we compare gold to the tip? The tip is a proxy of real interest rates. As real interest rates fall, the tip goes up. As you can see in your next chart, over the last 5 years, with gold in candlesticks and the tip is a blue line, they move with 95% correlation. Except the last 3 months, where the tip has gone sideways. Like I said, still 125.76. When gold peaked August the 6th, it was 126.50. So therefore, gold in tip terms, if you want to look at it that way, should still be $2,021. Instead, it's $1,804. That's a more than 10% gap, 12% gap, whatever it is. This will close. This chart would suggest, and you can take it back longer than this if you want, this chart would suggest it will close eventually. Either real rates are going to sharply rise, which means nominal rates would probably have to sharply rise, which the Fed isn't going to allow, but whatever. Either real rates have to sharply rise, which would drop the price of the tip, or gold's going to sometime catch up. So there's your 5 years of that. Look at it on a 6-month chart. Again, coming out of June, peaking together. This gives you a relative price, if you want to call it that, of just over 2,000. I'll give you another one. I mentioned the Dow hit 30,000 today. All this liquidity, $14 trillion of central bank liquidity flushed out in the world in the last 8 or 9 months, driving everything higher. Guy reminded me on the site today that I said back in March or April that I would not be surprised to see the Dow get to 30,000 by the end of the year. Lo and behold, here we are. Why? All this cash. Everything else frickin' goes up. Gold did too for a while until it damn near broke the LBMA. And now here we are getting smashed. So let's compare. That same kind of chart. This is gold with the S&P. You can see them both getting smashed together in March in the liquidity crisis that led to the start of QE to infinity. And then moving up in tandem. Gold peaking in August, S&P peaking in early September. Trading sideways to down, and now gold S&P at new all-time highs. Gold down here, 1,800. Implying an S&P implying a price, if they were still moving together, somewhere up near 2,100. Again, why? Why would gold suddenly underperform? All the while, the dollar's down here at 92, where it was in August and September. The tip is 126, where it was in August and September. But gold is down $200 to $300. Won't stay this way forever. It will not. It just won't. Okay? Speaking of the dollar, this is just the last 4 or 5 days. How it sprung on that market flash PMI stuff on Monday. From 92.10 to 92.80 in the course of about an hour. And of course, that was used to smash gold for 35, and then gold got hit again for 35 yesterday. Nice. But then today now, after several breaks of 92, a couple of them, see those? Big red candle, immediately another big green candle. Twice. Overnight last night and again this morning. And then a desperate defense above there. We finally fallen below a last of 91.93. We'll see where that goes tomorrow without the U.S. banks around. And then we will see where we close in the dollar index on Friday. And so again, now right below that 4 days of dollar, here's 4 days of gold. But all the generalists say gold just only goes up when the dollar goes down and vice versa. That's all it is. Maybe not. Oh, and by the way, this has got that volume spike on it. 15-minute candlesticks. Almost 50,000 contracts in 15 minutes. Down out of the wedge through 1860. Hell, throw in the next 15 minutes. That's another 25,000. You got 75,000 contracts, probably about 20 minutes. And that was all it took. And then the Momos took it from there, drove it all the way down, broke the 200-day yesterday. I put some lines on here, so if you want to watch something overnight and into Friday, first level gold would have to get back above, obviously, is the 200-day. But then it's got to get above 1815. Then it looks like maybe 1830. But again, look at the You cannot tell me that there was some sudden rush. Everybody on the planet wants to dump their gold based off of the flash PMIs back on Monday. No. Just had another chart pattern that needed to be smashed. And was smashed with 75,000 contracts. God, we even traded that many since. Friday morning, November 27th, brought another Black Friday price slam. Gosh, I've been doing this for 10 years now. It seems like almost every year it seems to work out this way. Today was about $35 down shortly after the COMEX open. No doubt related to the ongoing expiration of the contracts for December that go off the board tonight into first notice and their delivery phase on Monday. Kind of a major flushed liquidation event today on very low volume. I mean, it's Friday after Thanksgiving. Markets are low volume across the board. So just a little bit of a push today, and we got washed out for $35. However, this also typically marks a low. A big spike washout on low volume, finally crashing out price. Again, today bottoming out near 1770, but as I speak, we're back up to 1785. The mining shares aren't buying it. GDX and GDXJ now both up on the day. So as we flip the calendar into December next week, let's see if we can begin finally ending this consolidation phase and turning higher into the end of the year, just as we have each of the last couple of years. Thanks again for listening to the TF Metals Report Weekly Highlights. Please subscribe to this channel and maybe give us a like as well if this is something that you enjoy and appreciate. We'll have another one of these for you next week.